Hi, this is Charles Kelly. Today I want to give you 10 quick tips on how to save money on your insurance. Now, I'd just like to start by saying there's a lot more money tips in my book, Yes, Money Can Buy You Happiness. Loads of stuff here. The 7 money myths, the ways that the 3 hours of money management, and the smart money manager. All it's in there. You can find it on Amazon. But today I want to concentrate on insurance because we've seen the headlines today that some of the buildings insurance in this country has gone up by 1,000%. Yes, 1,000% from last year's renewal. Now, a lot of people might expect a small percentage, maybe a 10% increase, but when you get 1,000% increase, that's just blows your mind. Now, obviously, there's a reason for that, and that is because of these buildings, these flats that have been built with fire hazard cladding that until we had the Grenfell Tower crisis, nobody seemed to know would cause a fire and would cause a fire to spread much faster. It's unbelievable that nobody knew because these buildings were built with certificates saying they were safe. They were, probably inspected by the fire brigade. The local authority would have given, their certificate, their seal of approval when you build anything. When you put an extension up, the local authority has to come in and give you a certificate to say that it is safe. It's not planning permission. It's a certificate saying that it's building control, in other words. So you'd have had that. You've had building control. You've had guarantees by the NHBC, National House Building Council, to say that this building is guaranteed for X amount of years. And then the fire brigade, and then your mortgage company would send a surveyor to say, hey, we're going to look at this property and we're going to satisfy ourselves that it is sound and this is sufficient to grant you a mortgage on this property. So how this can then turn out to be all wrong, everybody's wrong, I just don't know. But nobody wants to take responsibility. The people who built the building say, no, it's not our fault because we built this with the regulations at that time and everything said was fine. I can accept that to a certain extent. The freeholders won't accept it. The Institute of Chartered Surveyors, the Royal Institute of Chartered Surveyors, say no, it's not our fault. We're they're not standing by any of their surveys, of course. The insurance companies don't want to know, and then the lenders don't want to know. And finally, the government has put up a little bit of money, but it's not solving the problem. So we heard that a 28-year-old woman who bought her flat 2 years ago has just declared herself bankrupt because she said, look, this property is virtually worthless. I can't sell it. I can't do anything with it. And that she faced high rising service charges because some of these buildings have to be protected round the clock by somebody watching the building to see if it goes on fire. So they've had their service charges, which you've always got to watch out for when you buy a flat, have gone through the roof. And then the insurance premiums, in some cases, have gone up by 1,000%. So each flat might have to pay another £2,000 on buildings insurance, where you'd expect to pay a few £100s. So it's really ridiculous. And these people are stuck in these properties. They can't, as I said, they can't move on. They can't sell them. They're unmortgageable. They're unsaleable. They're just almost worthless in some cases. So until the government steps in and does something about this and takes well, I say the government, but don't forget the government is using our money. It's taxpayers' money. So a lot of taxpayers might say, well, why should I fork out millions or even billions because something's gone wrong on people's flats? It's a private matter. So not everyone agrees that people should be bailed out when I don't own one of these flats, so why should I pay for it? Because the government doesn't have its own money. The government is using our money, taxpayers' money, to pay for these things, like it is for furlough and these schemes like it did with bailing out banks and all these schemes that are going. It's our money, so just be careful what you wish for here. But yeah, people I do feel sorry for them because they are really stuck, and I think the builders should take some responsibility, as should the surveyors who said this property is mortgageable and safe. I don't know all the answers on this, but this woman said, I'm declaring myself bankrupt. Did she really need to do that? I don't know. By handing in the keys, when you say to the lender, look, I don't want this property anymore, here's the keys, the lender may go after you and make you bankrupt, but do you really need to declare yourself bankrupt? Or maybe she just was overwhelmed by the pressure of it and just said, look, I don't want anybody chasing me for money, and therefore I'm going to declare myself bankrupt, which costs money actually. You have to pay to do that. Whereas if somebody else makes you bankrupt, you don't pay the fees, but you've got to pay the court fees to make yourself bankrupt. And she'll be discharged within, I think, 2 or 3 years. She'll be out of it, and then she's debt free. At the moment, she's depressed. She thinks it's going to ruin her the rest of her life. Not necessarily. She can come out of this. Lots of people have been bankrupt before. Even Donald Trump, and have been bankrupt. So, and they've come out of it after that. I mean, Donald Trump's in America; it's different. But lots of business people in this country have been made bankrupt, some more than once, and still come out of it. So, I would say to her, don't think this is the end of the world. But I'm not sure. Perhaps you've jumped the gun a bit by declaring yourself bankrupt in this case. So, we've got to feel for those people in this cladding scandal, really, and I do feel for her. But don't necessarily jump in and make yourself bankrupt. Try and stick with it, because I'm sure that this will be sorted out in the end. Now, insurance across the board is going up, and for instance on car insurance, most people are hardly using their car now. They're doing less mileage, and yet I've had my renewal in the other day, and it's gone up. So my car insurance and buildings insurance has gone up. It's called walking the price up. They start you off on a deal. You say, right, come to us and we'll give you this cheap deal, and the next year it goes up a little bit, and the next year it goes up a little bit more and a little bit more. The risk hasn't increased. Their costs might have increased, but it's not going up by inflation, which would be almost 1 or 2%. This is going up by 5-10% every year. It's called walking the price, and it will cost you thousands of pounds if you stay with the same insurance company for years. Now, I was a financial advisor. I worked for insurance companies, so I know a little bit about how these things work. And it's a bit like the banks in reverse. The banks get you into them on a great interest rate, say on an ISA, and then they walk it down. They walk the interest rate down over the next few years. So they have a headline rate, and then it goes down and down and down until they say, well, why don't you move to this new account? But walking the price up with insurance is a well-known industry practice. So I'm going to give you 10 tips to avoid this. Now, I'm relating this to car insurance, but it kind of applies to any insurance, because I see this on buildings insurance all the time. And it can be a hassle to change, but the first rule is loyalty doesn't pay. That's the rule number one. If you just stay with the same company, you think, I'm being loyal to that company, they'll look after me. Well, unfortunately, they don't, do they? Because they just hike your price up and ends up costing you a load of money. Now, you can't do this with every kind of insurance. Say, if you've got life insurance or health insurance, you can't just easily change, because, you may lose out on some benefits. So, but as far as car insurance and things like buildings insurance and contents insurance, usually you can change, but perhaps not in the middle of a claim for subsidence, for instance, but usually you can change. So first thing on car insurance is never automatically renew your car insurance without shopping around. Now, auto renew is very useful on car insurance or any insurance, because it means your insurance doesn't expire because you didn't get that letter, or you put the letter away and you didn't respond to it. So I always have my insurance on auto renew by direct debit. So if I forget about it, which I frequently do, it's still there. But you should, when you get that renewal notice, that's the time to sort of shop around a few weeks before, not at the last minute. Apparently, if you start shopping around at the last minute, they assess you as a higher risk, and on their computer they'll quote you a higher premium, believe it or not, because they're asking you so many questions now about your lifestyle and your habits and that sort of thing. So they know so much about you, and they're doing credit searches on you even. So they have a very smart way of assessing things by computer. It used to be done in a book. You'd have a rate book, and you'd go, oh yeah, that's Nissan Micra, yeah, okay, age, and they tell you verbally what the premium will be. It used to be a lot of hassle. They used to send you cover notes and ask for this document and that document, but now it's so much easier. But the insurance companies have mechanized the whole thing, but it can cost you more money. So tip number 2 is never auto-renew without shopping around, but I don't suggest not auto-renewing. Number 3 is check the renewal 2 weeks to 3 weeks in advance of the renewal date, not at the last minute. Number 4, if you're doing low mileage, maybe consider looking at an insurance company that specialises in low mileage insurance. If your mileage has gone down, you're working from home, you're not doing much mileage, or you've just got a bit older, you maybe retired and you don't hear around the country anymore. So look at that, because it's funny how we're all doing less mileage now, and yet why is car insurance going up? Why have they quoted me a higher premium when I'm doing a lot less mileage these days? But they do. If you're a young driver, you can save money by, this is tip number 5, but if you're a young driver, look for ways to save money, maybe by adding an older driver, your mum, your dad or whatever, and a more experienced driver, because that can bring your insurance premiums down dramatically. Number 6 is try getting quotes if you've got a family and you've got several cars. Look for a multi-car policy, which can save you money in some circumstances. Some circumstances it doesn't. Maybe you might want to come off the multi-car insurance and look for quotes individually, but sometimes a multi-car policy can save you money, because in a family now sometimes there's 4 cars, 5 cars even. So it makes sense to look at that. Number 7 is your own insurer could be cheaper on a comparison site than they are quoting you directly. Hang on, does that make sense? So if they're saying directly to you, you're renewing, your insurance is £500 a year, and you go onto a comparison site, you might find that the same insurance company is quoting you less than they would by dealing with you directly. That's because on comparison sites, they quote lower premiums. Then you can go to the company and ring them up and say, hang on, how comes you're quoting me this? And they'll probably reduce the price to the lower price. So that's a little trick they play. Number 8 is make sure you get like-for-like cover and check the small print in terms and conditions, because you might be getting a cheaper policy, but the terms are not so good. Maybe they don't give you some benefits that, like a benefit that allows you to have one or more claims or an accident claim without affecting your no claims discount bonus. No claims discount bonus is it's a little bit of a con really, but they if you don't claim, they give you a more and more discount. But why does my premium seem to keep going up? Anyway, make sure you get like-for-like cover before changing any type of policy. Number 9, at very least, ask your own company for a better deal. At least call them up and say, look, I can get a better deal around by shopping around, going somewhere else. Maybe you've checked on a comparison site. Will you offer me a discount to stay with you? And most companies will. Even on mobile phone contracts and other contracts, they usually want you to stay with them. Your utilities providers, they'll all want you to stay with them rather than move away. Why? Because it costs more money for them to get a new customer by advertising than it does to keep you on. And anyway, they'll eventually walk your price up. Even if they give you a discount this year, they'll eventually walk your price up. And number 10, watch out for those monthly payments. If you opt to pay monthly, they're not really allowing you to pay monthly. They're financing it. So they get finance on that premium and give you, so they get their money up front, but you're paying a finance company sometimes up to 40% more just for paying monthly. So if you can pay in advance, if you can't pay it from cash, maybe on a low interest credit card might be better than paying monthly installments, if you like, with the insurance company. Because the other little con they brought in is using finance companies, so they get commission back on that, and sometimes financing things can earn them more commission than they're earning from selling you that policy. So they love to put you on monthly premiums, because if you're paying 40% extra to do that, you can guarantee they're getting 10 or 20% commission on that. So it's a little bit of a wheeze that they do to earn extra money. Finance is big commission. I knew a lot of car dealers earn more money financing your car than they do selling it to you. So the profit they make selling you the car is low compared to the finance commission they make. So if you can pay it annually, or you can pay it on an interest rate, low interest card, do so, because that will save you money. Okay, so that's a few tips there on car insurance. But it applies to other things like property insurance. Now, the big question on everybody's mind at the moment is on property prices is, will they rise or fall in 2021? Now, nobody has a crystal ball. And if you look at 10 different gurus, they'll tell you 10 different things. My view is that property prices are a little bit high at the moment, but property price, who would have thought last March that property would go up in 2020? In fact, went up on average by around about 6 to 7%, just under 7%. So it's very difficult to predict that. One thing I can predict is that in 10 years' time, average property prices will be higher than they are now. As they were, from the last crisis, average property prices were higher. Unless you buy in some real dud area, some really depressed area that doesn't go up at all, you'd have to be very unlucky to buy a property now and find that, in 10 years' time, it's not worth more than it is now. Most parts of the country have gone up a little bit, in 10 years. So, if you buy wisely, if you buy at the right price, you make your money when you buy a property, especially if you can buy below market value, then prices will go up over time. And if you're buying your own home, if you're buying, as long as you don't buy one of these flats with cladding on it, and incidentally, I saw a block of flats with that cladding. A flat was for sale at an auction, so you can be very careful in auctions, because this block that I know of particularly. Why? Because I used to deliver papers to this block, and it's a block that when I was a lad I used to deliver papers there, and it was on my paper round, and it's a high-rise block, but it's in a quite a nice area. It's in Swiss Cottage, and this block is one of the blocks affected by these claddings. So the flats are up for sale there in an auction, which always makes you suspicious. Why is it for sale in an auction rather than just with a local agent? It's in a desirable area. But I know this block had cladding problems, so I don't know if that's sorted out there. I won't name the block. But, if you buy a property like that, then yeah, it could be worth less in 10 years' time. But on average, prices, should go up in 10 years' time. But the market's still hot at the moment. I was out looking at a few properties today. The agent said, the vendor's already had an offer on it, on one of them, and he wants even more than we put the price up for. So I'm thinking, hang on a second, what's the point in going? I'm not going to get into a bidding war on this. But that's the way it seems to be going in the market at the moment. But I think when the results of this financial crisis, the worst recession for 300 years, start to filter through, and these furlough schemes come to an end, and mortgage holidays and rental holidays come to an end, I think something's got to hit the fan somewhere. But prices at the moment are still going up. Now, you can find out how to buy properties in a seminar that's coming up, a webinar, Ultimate Property Guide for Beginners, to avoid these pitfalls in buying properties that may not go up in the next few years. And there's a webinar available for a good friend of mine, Kevin McDonald, who's running this webinar next Wednesday, the 10th of February, 7 p.m. And he will show you how to get started in property on this webinar and how to overcome the most common mistakes from beginners. Now, he specialises in creative financing, meaning that you don't necessarily need your own money to buy properties. A lot of people think you need a fortune to buy properties, but you can get into properties with no money down. You can get into property with no money at all. And you can earn money from property in lots of different creative ways. And Kevin will be going through some of those strategies next Wednesday. I'm going to put a link up on my website and on this Facebook page here. So do have a look at that and check it out. Very, very interesting guy. He's come from having 100,000 in debt to becoming a multi-millionaire in property, most of it done without using his own money. People think, oh, can you really do that? Well, of course you can. People have been doing no money down strategies and deals for centuries, since the early Crusades and people taking voyages across the sea to find gold. They were financed with other people's money, in this case King Philip, who would finance somebody like Magellan to go off and find treasure around the world and bring back and really discover new territories. That's how these were financed. He didn't have his own money and his own ships. He got in King Philip of Spain to do this. So this has been going on forever. So if you have deals, you can make money from property without using your own money. Believe me, I've done it. I've seen it 1,000 times. So have a look at that. Check out the link there, and I wish you a good evening for everybody. Have a great time, and I will speak to you again soon. Thanks for everyone who tuned in on Facebook Live. Hi there to Rodney, Shirley, everybody watching there. And do click the like button and share the post if you like it. Always appreciate your comments as well, whether you agree with me or not. And I wish you all a good evening. Thanks very much for listening. Bye for now.